Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Kilpist India, which I talked about 2-3 years back. It has produced very good results. It has produced very good, you can say, investment profits for people. And now I'm bringing this stock again because I feel at these valuation this looks extremely attractive. A disclaimer, I have the stock in my portfolio, but it can be big from here. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Kilpest, here's a small request to kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you pay $100 upfront, you get 1 year access by paying for 10 months, so that's a 16% discount. Also, if you cannot join Patreon, you can join me on YouTube by joining the YouTube membership. So that is also can be done, and you get all benefits of Patreon there. In terms of this company, it is a leading diagnostic kit player and is the first firm to get US FDA approval. Before this, Kilpest had the European approval, as well as they were exporting to Africa and Central America. The return ratios are exceptional and the margins are very good, and there's a lot of trigger in offering for the company. So it has been exporting to Africa and Americas, and now is set to do the same in UK and US. So they are set to do the same in United Kingdom and United States as well. The market cap of the company is around you can say 300 crores. If you look at the numbers, so this is a deceiving number from December 20. Sales were down by 66% to 14 crores. Profits were down 70%. But you need to look at FY19 numbers. So in December 19, they had sales of around 7 crores, so it doubled. Profit also more than doubled from last time around in this quarter from FY20, so December 19, that is. So we need to look at that. It is a debt free and high cash business. Return on equity of 60%, margins of 48% is completely exceptional, and this is the reason why the stock really is an enigma, why it is trading at only 300-400 crore market cap, probably because of the kind of results it's producing. But you need to understand that FY21 was a huge year because of the pandemic, and now things will normalize, and even on normalized numbers it looks pretty good if you compare from FY19, FY18, FY19 point of view. So I've done a SWOT analysis on the stock. So let's look at the strengths. It is a market leader in the testing and diagnostic kit space. It has a high margin of over 45%. This is operating profit margin, or you can say operationally it is doing extremely well. Return on equity is extremely high, and sales growth has been of, you can say, 30% and beyond in normal quarters, say before the pandemic. I think afterwards they would gain more clients, so they will do exceptionally well going forward as well. So it has periodically increased cash. Currently the cash reserve is around 136 crores, so this is also something to be looked at. A company that has a market cap of 300 crores has cash of around 136 crores and continuously producing good margins and gaining clients. So they have gained clients, they have gained a lot of clients here in India, across India, and now they are trying to export into US and Europe, which will also gain a lot of momentum globally for the company. And promoter has been slowly increasing stake from lower levels, which is also a very big positive. In terms of weaknesses, it is slow on many promises made for past many quarters. Now, this is something that is really irritating the investors. even for me, I mean, they have announced about NSE listing, they have announced about 3B Black Bio and the merger, etc., to come into effect, and 3B Black Bio being listed, but it has not come to fruit over the last 15-18 months. Hopefully, in the next 1 year, it should be done. It is in a space where competition from China is stiff, which could be a threat as well as a weakness for them. Sales has not picked up as much from other verticals. So yes, testing kits has done well, but other verticals haven't done that well, in which they were doing well earlier. The point here is that probably because exports were muted earlier, and exports were, there was some sort of a restriction, so that could be a reason why sales were down. But now that it has opened up, I'm hoping that from next quarter onwards, exports should increase. Promoter stake is low, that is also a weakness, around 37-38%. It should increase going forward. In fact, after listing of 3B Black Bio, I think promoter stake will increase inevitably, because he has a lot of stake in 3B Black Bio. And product prices is extremely low, that is also a weakness for the company. It's now come down to 50 rupees a kit, 55 rupees a kit, versus 800 rupees at one point of time. The opportunity that lies ahead for the company is huge, and that is why this company can become very big going forward. So it can gain market share in US and Europe by putting its foot there. So once the export there or sales begin there, I think things can really get going there. NGS kit can be a big breakthrough. Now they are working on the NGS kit and that you can say cancer treatment kits and everything. So hopefully going forward in the next 3-4 years, they'll be able to optimize that as well. And tie up and listing of 3B Black Bio is a huge positive. It will be listed as a biotech firm and will gain a lot of momentum, because PE will expand. The PE will not remain at the level it is. I'll analyze the valuations in a bit, but currently it's trading at very attractive valuations. Listing on NSE will also bring in more, you can say, investors, and the stock price should perform even better. So that is what the opportunities are going forward. Cash in hand could also lead to acquisition. I don't think it could lead to buyback, but acquisition is a very, very prominent thing that could happen, realistic thing that could happen. Now, let's see what the management does with 130-140 crores in hand. And tapping more government orders globally would be interesting. So in India, they have tapped a lot of government orders, hoping the same would happen in Europe and US going forward. In terms of threats, I believe heavy competition in India is also a threat. In India, a lot of dumping from China is happening, so competition from China and heavy competition in India would also affect the business to be impacted post the pandemic, because in the pandemic the company did extremely well, and you would agree that the numbers were extraordinary, and things will cool down from here on in. And kits from China and Korea has meant that 1100 rupees kit or 800 rupees kit is now selling at 50-55 rupees. So they would have to look at other verticals to perform in order to do well. Higher raw material prices is also a concern, and currently with the kind of boiling oil that we have, the crude prices, I'm pretty sure that it would affect every company all across the board. So something like Kilpes will not be left behind. So that is also a concern, and barrier to entry is extremely low. So there could be other companies that could be making the kits, there could be other companies that would get into the diagnostic space. So that is also a reason why the company might not do well that well here in India, but globally they could set forth and do exceptionally well. Dixon Technology and other companies have got into kit manufacturing, and so there are other firms that are getting into it, and going forward it could really become very crowded. So hopefully a way through it is by expanding globally and doing well globally. That could be one way. So these were in terms of threats that the company may face. Let's look at the other points in the presentation. So in terms of valuation, current market cap of the company is around 300 crores and the EPS of the company is around 40 rupees. It is trading at 9.5 times current EPS, which is not very expensive, but you need to understand that the EPS will not remain 40 rupees because 1 or 2 quarters had the effect of the third wave of the pandemic. So what will happen is for FY23, which will be a normal year without the pandemic, company doing well because of getting more clients, etc. Whatever things happen, they are expected to have sales closer to 70 crores in my assessment. This is purely my assessment. This is not something that the management has talked about. So in my assessment, 70 crores of sales could be possible in FY23, and EPS could be around 40% of the sales. Normally it is around 35, 40%, 45% of the sales. Let's say 40% of the sales, so that is 28 rupees could be the EPS. Based on that, at current market price of around 400 rupees, it is not trading, I mean, very expensive. It is trading at something like 13 times or 14 times earnings, which is not extraordinarily expensive when you consider 1 year forward. So what I feel is that it will be listed as a diagnostic firm. That is also one reason why I believe that 13, 14 times may not stay. PE should expand to around at least 30 times, if not 35 times earnings, taking in a growth of 30% for FY24. EPS could be close to around 35 rupees. So 28 rupees for FY23. For FY24, I expect EPS to be close to 35 rupees. And so in that regard, if you say at a PE of around 35 for an EPS of 35 by 2024 December, so that is probably in about 2.5 years time, nearly 3 years time, I expect at least 1200 on the stock. So 35 into 35, close to 1200 minimum that I expect on the stock from the current levels of 400 rupees. So a 3x over the next 2.5 years, very much possible. But again, a lot of things have to fall into place. There has to be an NSE listing, there has to be a 3B Black Bio merger and listing, an acquisition to take place, and sales of around 70 crores and further sales growth to take place, exports to US to happen. I mean, if all these things come about and things go fine, I do expect the stock to be close to 1200 over the next 2.5 years or so. All EPS estimates are approximate, so kindly take that on note, and these are all my personal projections. So in my opinion, the strategy could be you can buy as an SIP starting this month over the next 6-8 months, if not 12 months, but over the next 6-8 months. Look for improved results to buy rather than looking to buy at lower levels. Look for the results to improve and then buy more as the stock goes higher. That could be a better strategy to do. Do keep a stop loss, probably 25%, 30% from the top, and exit investment if debt increases. There is absolutely no debt on the company. Pledging increases, again zero pledging company, or debtor days increase sharply. So look for that. Unless that happens, you can hold the stock and hopefully gain a lot. So this was my video on Kilpes. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.